So planes might fly above 30,000 feet, but the profits in the airlines industry rarely takes off. And this is stock number 7 in our 7-day series, showing you how to start investing in companies around you with StockOracle. So the company we're talking about today, it's one of the biggest names in the skies, American Airlines. So here's how StockOracle ranks the company on our 6 key matrix: predictability, profitability, growth, economic mode, financial strength, and valuation. So I believe we're not foreign to the concept of traveling, especially through planes. And at first glance, airlines seems like an incredible business. Think about it. Global demand for travel keeps growing. Everybody loves to travel. Who doesn't? Fleets actually gets more efficient, and brands like American Air carry millions of passengers every year and counting. But when diving deeper into the economics of the industry, you'll see why airlines, despite their size and importance, have been graveyard for investors. So using StockOracle, here's how things actually stack up. So let's look at the report card of American Airlines in StockOracle. Type in the ticker symbol of AAL, which represents American Airlines Group, and you can see at one glance, looking at the Oracle IQ, they're only ranking high on predictability, but for the rest of them, profitability, growth, mode, and financial strength, they are either an orange or even a red flag. Specifically for valuations, I think they can be considered fairly valued, but let's not even talk about how much they're worth today. Let's focus much more in terms of the business quality. So looking at the overview, I think it's quite intuitive that American Airlines primarily operate in the United States, and in terms of a percentage breakdown, US makes up more than 70% of their revenue breakdown. So when we look at their past financials to see their growth trends and how they've been performing, I think we can admit that there is a very strong revenue growth trend on the top line, but it doesn't necessarily translate to their bottom line operating income and net income. I think clearly for a lot of all these so-called airline companies in 2020, 2021, they were very severely impacted by the pandemic. But that does not give them the license to continue underperforming, as we have seen a huge amount of travel uptick in the last 2 years. And by looking at the translation to their bottom line, it does not reflect a very good picture for the business at least. So we do see the operating cash flow going up, but I think we have to focus more in terms of the net income. They did not translate very well from the very huge increase in revenue over the last 3 years. Moving on, looking at some of their profitability ratios, it's good that they have all started to turn a profit. Gross margins, operating margins have all went up, but I think in terms of the percentage wise, they aren't really considered a very high performer in this case, with an operating margin of only 5%. So same thing when looking at the ROIC or even ROE, ROA, they're not even scoring above a 5% benchmark. I think in our general rule of thumb, having ROIC of more than 12 to 15%, they're considered a pretty quality company, especially in this particular industry. So moving on to understanding their economic mode, looking at their AI mode analysis, they did present an overall score of 3 out of 10, suggesting that American Airlines don't necessarily have any mode at all. Especially when we put ourselves in the shoes of not just an investor, but as a consumer, we are relatively price sensitive. There really isn't a very big amount of loyalty being pledged to a particular airlines unless you like their services or you have some sort of a loyalty program with them. But generally speaking, I think the entire US airline industry has intense price competition, limited product differentiation, and extremely high fixed costs, which really turned the entire script upside down. So even when looking across the last 5 years, after rebounding a little bit from the 2020 pandemic, they basically fell flat. So to give you a very quick peer comparisons across other names like Delta Airlines, Ryanair, United Airlines Holdings. So if you scroll all the way down, they will present to you the Oracle IQ charts of the different companies. And you can really see that a lot of all these so-called airline companies aren't really doing necessarily well. A lot of them are in the red and orange sector. A little bit similar with the previous video when we talk about the streaming or the content entertainment platforms. They are generally all not very good industries to begin with. Hence, huge amount of competition, very hard to differentiate. There is not much economic mode to begin with. But I think just a very quick glance across some of these companies, I would guess you can argue that Ryanair Holdings might potentially be a better candidate when comparing it to American Airlines here. So let's do a very quick look, RYAAY. If and only if you as an investor really wish to have a specific exposure to the airlines industry for whatever reason, I'm looking at Ryanair today, at least they do have a narrow moat, and the Oracle IQ chart do present certain higher levels of predictability, profitability, and growth in this case. So yes, I think it's mainly an airline industry, no doubt, and it's more a Europe-based airline that has exposure to Italy, Spain, UK, and things like that. So looking across their financials, want to see how fast or how much they're growing. So we do see some sort of a consistent revenue growth trend, and operating income and net income is at least relatively stable. That is also able to print out certain levels of cash flow. So in terms of the company matrix, I think margins after the pandemic has also recovered to at least 20% gross. And not only that, I think when looking across their different profitability ratios of like ROE and ROIC, at least it went back up to above 15, above 20%. So this is definitely a much healthier picture when compared to American Airlines, which I think when you put both companies side by side, and notwithstanding the fact that one is exposed to United States while this is more a Europe-based air carrier, but Ryanair, I think hands down, is a much quote-unquote better company. But it does not necessarily mean that you should put your money into this company specifically. And just to prove the point, I'm looking at Ryanair in totality when comparing it to their last 5-year stock performance. Clearly, it will probably beat American Airlines due to the distribution of different factors and understanding how the stock fundamentals has performed over the last few years. And of course, not forgetting the fact that you do want to buy companies only when they're undervalued, and you do have to crunch your own numbers and to arrive to a more appropriate estimation of your own intrinsic value calculations. So with that in mind, I hope that I gave you a better appreciation of the StockOracle platform and how you can use it to harness your own stock research process. So airlines look glamorous on the surface, but the economics underneath are tough. Operating an airline comes with enormous fixed costs. Think about your planes, your fuel, maintenance, staff, and even airport fees. So whether a flight is half empty or sold out, most of those costs don't just go away. On top of that, demand is highly cyclical. In good times, people fly for business and leisure. In recessions, travel demand just goes down the sink. And you add in the fact that passengers mostly shop on prices rather than loyalty. And you end up with a business where margins are razor thin and profits actually swings wildly. And this is why even the biggest players like American Airlines often struggle to deliver consistent shareholder returns, which is reflected in StockOracle's predictability benchmark. That said, I think consolidation in the sector has reduced some of their competition, loyalty programs have become valuable assets in their own right, and global travel demand continues to grow over the long term. But as an investor, you need to weigh those positives against the industry's structural weaknesses. So airlines might occasionally look cheap, but cheap doesn't mean it's always good value, especially in an industry like this one with a high amount of unpredictability. So the lesson here is simple. Even the best run airlines can't escape the gravity of bad industry economics. And with tools like StockOracle, you can do a quick comparison in minutes. And if you want to get access to this investing tool, you can head down to the link below to check out our latest offer. And this is CK from Piranha Profit signing off. Till next time, keep winning.